On to your markets news now. Most Asian markets retreated today. This as they were underwhelmed by the guidance given by AI giant Nvidia when it released its financial results, despite beating expectations in terms of its performance. The Nikkei share average closed down 0.024%. The Hang Seng Index ended the session up 0.5%, while over on mainland China, the Shanghai Composite Index declined by 0.5%. Over in the United States, stocks dipped at the close yesterday. That's despite a better than expected financials result from AI giant Nvidia. In the meantime, market players will be waiting for the personal consumption expenditure data due out tomorrow. The Dow Jones Industrial Average fell by 0.4%. The S&P 500 declined by 0.6%, while the Nasdaq Composite ended the day down 1.12%. Locally, the JSE is trading slightly higher, with investors shifting focus to July's money supply, trade and budget balance data that's due out tomorrow. The all-share index is up around 0.2%. The rand is trading at 17.69 against the US dollar, 23.33 vis-a-vis the British pound, and 19.63 against the euro. Looking at commodities, gold is trading at $2,522 and platinum at $943.70 a barrel. An ounce, pardon me, while the price of Brent crude oil is trading at $77.17 a barrel. Well, for more on the markets, I'm joined by Simpiwe Letlojane. He's the investment strategist at ABSA Investments, and he joins us now. Thank you very much, Simpiwe, for joining us. So Nvidia, they came out with better than expected results for the second quarter, but those were seemingly not well received. What exactly was the issue, and what other market drivers have you been looking at?
Yeah, certainly. Quite a stellar result from the company, still managing to grow revenue and earnings by triple digits, by more than 100%. But really, markets reacting negatively to some of the guidances going forward that were revised a little bit lower. And also the company also highlighting that they may be facing some challenges as far as the production of their latest technology is concerned. But what we're really seeing with this company and markets in general is that there is a bit of a more disproportionate reaction to negative news as opposed to positive news. And this we do expect to be the characteristic of markets going forward, especially for sectors that are quite overvalued and where valuations are a little bit stretched, because in the price, markets have essentially priced a lot of perfection, a lot of good news. And so any negative surprises do see reactions being quite negative.
Yeah, we know that the local currency is driven by lots of factors, outside factors and local factors. We've had data come out on the producer price index showing that inflation has slowed. It came in at 4.2% in the month of July on a year-on-year basis from 4.6% in the month before. And of course, this is a trend that we're seeing with consumer price inflation also coming down. It's now at around 4.6%. Does this now agitate for a rate cut, do you think, by the South African Reserve Bank, especially in light of the fact that the US Fed has basically said that they're going to cut rates come September?
No, definitely. I think, all the data points that we are seeing permeating at the moment all do but, confirm that interest rate cuts by the MPC in September. We're seeing inflation that eased by more than what markets had anticipated, and now currently closer to that 4.5% level. And as you've mentioned on the global monetary policy side of things, we're seeing the US Fed also more and more likely that we'll see a cut there in September, especially after we saw inflation in the US easing below 3% and unemployment in the labor market showing the weakness that it has shown recently. And then also, of course, quite importantly, the rand exchange rate being anchored quite low. And so from a inflationary outlook perspective, that certainly being one of the factors that will curtail inflation locally and provides quite a key catalyst for interest rate cuts to begin.
Specifically for September, does the Reserve Bank cut rates? And if it does, by how much?
I think for September, on our base expectation would be 25 basis points. And we do think that it definitely is on the cards in terms of what we're expecting.
So let's take a look at a stock, Impala Platinum. They came out with their annual results showing that headline earnings declined by 87%. Not doing well in terms of the PGM price, that declining massively both in dollar and rand terms. But their production was good though. Tell us your thoughts about them.
Yeah, I think, of course, for miners, the production environment was quite good for the company. So operational performance was fairly decent. They managed to grow volumes. But really, as you mentioned, the key pain point is prices, especially for their PGM basket, in particular the likes of rhodium, palladium, and nickel. If you're looking at the realized prices this year compared to last year, seeing quite significant declines in those, offsetting the volume increases. And then, of course, from an earnings perspective, especially given high operational gearing for miners, we're seeing a much more pronounced decline in earnings. In response to revenue declining and costs did decline, but declining by much less than the revenue decline that we saw.
If you were to look at all the various sectors, but specifically at PGMs, what's the future for them?
In terms of PGMs, of course, what we are seeing is that as far as, the use in catalytic converters, especially in terms of, combustible vehicles, that has essentially been prolonged by the fact that electric vehicle rollout and demand for electric vehicles is not as fast as what was initially anticipated. And so the fact that, you will still see, hybrid cars and combustion engines still being on production lines does mean that, the likes of platinum, palladium will still, have some demand. But over the more longer term, that aspect does, of course, provide some key headwinds for that particular sector.
Yeah. Simpiwe, thank you very much for your time and insights. As always, Simpiwe Letlojana, he's an investment strategist at ABSA Investments.